Well, hello and welcome to another video in the series where we're taking a closer look at the quantum trading indicators. And in this video, we're focusing on the VRSI indicator, the volume relative strength indicator, and in particular, its application for futures. And as I've explained in the introductory videos, which I hope you've had a chance to take a look at, the indicator works in all markets, all timeframes, and all instruments. We've done stocks. Here we're going to be looking at some futures, and then I'm going to be doing some ETFs, and also take a look at the slower timeframes too. We often concentrate quite heavily on the faster timeframes purely because you see the price action unfolding, and it's great for training, for education, for seeing things appear quickly. But the indicator works in precisely the same way from an investment perspective, and with that in mind, I'm going to record the dailies, the weeklies, and monthlies on a separate video, really to show you the indicator and how it can be applied when you're looking at this on the slower time frames. Either you're looking at it from a swing or trend trading perspective, or indeed from an out-and-out investment perspective. Now, if you've watched those earlier videos, the one thing that I've stressed throughout is that the indicator is always used in combination with our VPA methodology. The two are absolutely complementary. They are sister indicators, if you will. The VRSI is a subset. It's a look inside the volume price relationship to give us a view on what we call pressure. And pressure is a word you'll hear in all the videos because it's Anna and I thought it was the best description, the best descriptive word to apply to this indicator, because that's really what it's about. It's about the pressure, if you like, the momentum, the strength of a trend, or indeed the lack of strength in any trend where we move into congestion, for example. So it is very much about the pressure which is driving a trend through the prism of volume and looked at in a different way. The setup that I've got here, the workspace, is very straightforward. On the top line, we've got the 5-minute, the 10-minute, and the 15-minute charts, and that is mirrored below with precisely the same time frames. The only difference is that on the top 3 charts, I have the VRSI indicator itself. And on the bottom 3 charts, I'm purely looking at it from a volume perspective. Now, you can apply volume to the same chart if you wish. I've just broken it out here for clarity so that we can look at the two sides of the equation, if you like. I don't propose to spend a huge amount of time on the VPA analysis purely because there are so many examples, both within the stock program itself and also that we've done over the years on webinars and on the internet. So this is very much focusing on the VRSI indicator, which is on the top line, the volume relative strength indicator. If you've not watched the earlier videos, very quickly, a thumbnail of the indicator. First of all, the key components, we look at the fulcrum point here between bullish and bearish, or bearish to bullish. So always important level that we look at here, the 0 level. The second aspect we look at are the color changes, where we have dark colors representing very bullish or very bearish sentiment, and the lighter colors then representing a weakening in that sentiment, so lighter blue and pink, or salmon pink if you prefer. And finally, and perhaps most important of all, are the height of the pressure bars. So where we have a high pressure bar here, or an even higher one, this is very indicative of the pressure building. It's an increase in pressure. It's high pressure. Whereas over here, for example, we have low pressure. So it is a very intuitive, very colorful, very straightforward way to present this concept of pressure, volume pressure. And the other aspect, the other reason we developed this indicator was not only to give us an alternative view of volume and the pressure being applied in a trend, but also to help us stay in a trend, because one of the hardest things to do in any trading or investing is to manage a position. Once you've got a strong position in the market, The emotional response when the market reverses against you is to close out and take your profit. We all suffer it. It's something we have to deal with. And very, very much like the trend monitor indicator, for example, we developed the VRSI with that in mind to try and help you, give you that confidence to hold a position. So when you see the pressure building or the pressure bars not falling particularly fast in a trend, that's a great sign that the pressure in the trend, the momentum in the trend is being maintained, and we can retain our position in the market and not get flicked out when we see those devastating reversals, pullbacks, congestion phases that prompt us to say, okay, I've had enough, let me take my profit off the table. They are so damaging. And inevitably what happens is the trend then continues on thereafter. Now, of course, volume price analysis is absolutely fundamental in that decision-making process as well, and hugely helpful when we see secondary pullbacks and we apply VPA. It is another great approach that we use when we see a pullback and maybe we see we're in a downwards trend and we see the market rising against us, but we see volume falling. It's a great signal that this trend is going to pick up and continue in its bearish way, and similar to the upside. So we're always looking at VPA in that respect. Now, the other thing about this session that I'm recording right now is we are purely in electronic here. We are purely on Globex. And I wanted to record this in particular to show you that it doesn't matter where you are in the world, because volume and any volume related indicators will work in precisely the same way. It doesn't matter that when we get into the cash markets running alongside, we get this big upthrust in volume, which tends to compress the volume that has gone before. And I hope you can see instantly, just looking at the charts here, it's 10:30 UK time, so we are 2.5 hours in from the start of the UK session. Forex gets underway about 8 o'clock-ish. So we're about 2.5 hours in. But as I say, we are purely running on Globex here. We are not running with the cash markets alongside. And as I've said in many, many other videos, the price action that you see in Globex alone is relatively straightforward. It doesn't tend to be particularly volatile. We get just the same sort of trends, but what we don't tend to see are those big volatile spikes, those big swings that we see in the first 15, 20, 30 minutes when the cash markets open alongside the electronic. So this tends to be much more even paced, much more measured in the way the price action unfolds. Now, just before I open some of these charts up to take a closer look, the other aspect of using multiple timeframes is very much about the trend and how a trend develops across the time horizons. And this will always start in your faster time frame. So we've got a 5, 10, 15-minute combination here. So it will start on your 5-minute time frame. If it has some momentum, some strength, ultimately it will start to develop through to your 10-minute and finally across to your 15-minute. And you can start to see that occurring here because we're on the YM here, the E-mini future for the Dow Jones, very liquid contract, along with others like the ES and the NQ, and also obviously the ETFs as well. But you can see here how that is developing. And what's also interesting about this, as I say, this is the faster time frame, and we had a little bullish rally here, which took the index a little bit higher, but then we came back down to this level and we had another short period of that bullish momentum before it died away very quickly and then reverted into this quite heavily bearish sentiment. What you see moving over onto the 10-minute is really a tiny aspect of that, but really nothing very significant. And equally out to the 15 here, it's even less pronounced. We have a tiny little bullish bar there. Yes, it's dark blue, signifying some bullish momentum coming into the market. But what it's also telling you loud and clear that the height of that pressure bar is very small, in addition to which you've got a 2-bar reversal here anyway, which would confirm that weakness for you. But the point I'm making is that, and the analogy I've used many times before, is the if you throw a pebble into the pond, when the pebble lands, we get the ripples moving out and across the pond to the outer limits. And it's very similar to a similar concept here, where a trend or a reversal, if it's going to have some momentum and really develop strongly across the time frames, you will see it begin in your 5-minute, as indeed we're seeing here. We're seeing this bearish sentiment develop on the 5-minute. We're seeing it now take hold on the 10-minute, and that's being reinforced over here on the 15-minute time frame. So the 3 time frames really work together for you, helping you to stay in by looking across the time frames and just seeing what is going on my slower time frame. Because remember, any aspect of technical analysis which occurs on a slower time frame will always trump what is happening on a faster time frame. That's purely by the virtue of time, because it will carry more weight. So I wanted to start with that multi-chart view, if you like, and also to remind you of the importance of using multiple timeframes and why we use multiple timeframes. Now you can see also on the bars here, the pressure bars on all 3 timeframes, they're nice and tall. They're also maintaining that height, which is very important, which is to just squeeze that up a little bit. There we go. Which is telling us loud and clear that the pressure here is being maintained. We're not seeing a drop off very much. The same over here. We'll just squeeze it up a little bit there. And the same right the way out to our slowest time frame of 15. And just to drop down onto our VPA methodology below, that's also confirming for us. We've got an index that's falling, a market that's falling quite strongly. Nice wide candles in the downtrend. What are we seeing in terms of volume? Well, we're seeing rising volume, which is precisely what we want to see. In a falling market, for that trend to develop, we want to see rising volume, and we have that across all 3 here, as you can see. And this again really mirrors the relationship between our VPA methodology and the VRSI indicator, in that when we're looking at a downtrend as we are here, what we want to see is rising pressure in the same way as we're seeing rising volume. So the 2 really mirror one another. And as you can also see in this, let's pop up the 5-minute, make that full size for you. Just pull that down so we've got all the price action. There we go. What we're also seeing here is a very interesting development. Now, this is overnight in Asia, and as you would expect, it tends to move into congestion phase quite frequently in that period. We saw a move lower here with rising pressure bars, absolutely no problem, but then that very quickly diminishes. See how quickly we go back down to the fulcrum, and for the rest of that session, it's very quiet. The pressure bars are very small, very tight, very close to the fulcrum. But then as we break away and we get an injection of volume and pressure, that's when these rise very steeply, very sharply. And as I've explained in the other examples, when you see the steepness of the trend, that will be indicative of much higher pressure coming into the indicator. And we're seeing it again here. We're seeing a steep trend, and we've got high pressure coming into our candles there as the market moves lower. And what we're also witnessing here is very much the sentiment that the bearish sentiment is being maintained, even through this congestion phase here, which has been quite whipsawy, quite a bit of volatility in here as we get underway. This was 8 o'clock our time. So this was really the open of the European session, where we see a lot of liquidity coming into the market, and mirrored again with 8 o'clock here. So that's UK time. So we're getting underway, and we're now really getting into it. But as you can see, a lot of the signals there really giving us strong clues. If we hop up onto the 15 here, there we go. Just pull that down a little bit. This is just move that up, and you can see how we're starting to see a really strong development of the bearish phase there with the very high pressure bars. And that's what we want to see. We want to see this rising of the pressure bars. It's being maintained, so we know our bearish sentiment is still oops, sorry, wrong one. Let's just pop that one up. Our bearish sentiment is still very much in the ascendancy here. And This is what I talk a lot about in these introductory videos, is looking at the height of the bars, but looking at the height of the bars in relation to themselves here, and also looking at in context for benchmarking against what we had earlier. Now, this is in latter part of the Asia session, so we expect pressure here to be lower, which it is. But now we're seeing much higher pressure bars, so we've got stronger pressure, stronger momentum in this particular trend, which is developing very nicely. And even in these little reversals and pullbacks, which, as I say, can be so damaging, see how quickly this diminishes. We do go into some bullish pressure here, but look how quickly it falls away. And we also get a 2-bar reversal here. And of course, we will be looking at this in the context of our VPA methodology as well. So that's the YM. I've got 3 other examples just to show you, and these can be any futures you like, but I've got copper. So we're going to have a quick look at copper futures. And once again, just eyeballing across the 3 charts at the top there, instantly it tells you, well, we're in brick red or salmon pink, so it's pretty bearish for this particular future right now for copper prices. And that what we're seeing down at the bottom here is that is very much reflected in terms of our volume profiles here. You can see it pretty clearly here on our 15. We've got a lovely bearish trend here, punctuated with virtually no bullish momentum, just a couple of candles trying to rally and really not doing anything particular. There's no buying under those candles anyway, as you can see from the volume perspective, and really rising very nicely. So a very solid trend across all the time frames. So let's just pop open some of these just to take a closer look. Let's have a look at it on 5. Let's pull the price action down into better focus. There we are. And as you can see, really confirms the bearish momentum. This is quite a steady trend. We're running at about, 40 degrees or something, not quite 45 degrees perhaps. So we expect to see some high pressure bars, which is what we are seeing indeed. And what you notice about when we get these little pause points, these little rallies, these little congestion phases in here and in here, you're really not seeing the height of those pressure bars diminish very much. Yes, they've come off a little bit, and of course we've changed color as well, but they're really maintaining that good height. And the same here, really maintaining a very positive sign that this trend is not done yet. We're not finished yet. We get further injections here, which is great. We do fall away here a little bit as we move into this latter congestion phase here, but then we pick it up again, nice height still. Now perhaps we are seeing a point at which we may be moving back to an extended congestion phase, or even back into some bullish upswing here, because we're now getting back much closer down to our fulcrum point. We're not quite there yet, so we'll be keeping a close eye on that, and certainly obviously marrying that up with our VPA analysis below. Let's go up onto our 10-minute. See how that is shaping up. Very similar picture as you would expect. Nice, sharp, steep trend here, really confirming the strength here. And this is what I mean about the relationship between the VRSI and the volume price analysis methodology. We've got rising pressure bars here, really nicely rising, and also brick red in color. And that really confirms the inclination, the steepness, if you will, of the bearish phase of price action for the time being. So the two confirm one another. So if we're seeing a steep trend developing, we expect to see 2 things. First of all, our pressure bars rising, and we expect to see them extending very nicely as well. So we expect to see tall bars rather than short bars. But in the same way on 5-minute, we are starting to see perhaps the first sign that the sentiment is draining away a little bit. Now, what that may be indicative of is, because this trend is so steep, we may well see it flatten off. It may not come to an end. We're probably not going to see a V-shaped reversal where it shoots back up here. Maybe what we are witnessing here is a softening of that sentiment, a weakening of it, and that might well be reflected in a weakening of the angle of the downtrend. So a flattening of that angle, if you will. So moving into a congestion phase, possibly one which still has that bearish sentiment, but the price will slide lower rather than really collapse lower as it has done here. So again, those are the sorts of things that you can imply and infer from the analysis of the indicator itself. Let's just have a quick look at 15. Very much the same. And again, this lovely rising pressure bars here, confirming the strength of the bearish move lower, confirming the strength and momentum behind that trend, really driving the price lower, and plenty sufficient to give you the confidence to stay in and really not worry too much about these minor punctuations here of green, which really didn't do much at all, even up here when we were getting underway, really nothing at all. And the other point about this also, which I've stressed many times in lots of different ways, is when you're in a strong congestion phase like this, you have this wonderful ceiling of resistance and you've got a floor of support in here. And once that's breached, boy, oh boy, all you need is patience to take advantage of this trend. That's it. That's all you need. Just be patient, and jump in when the volume tells you so, when the indicator tells you so. And then above you, you can set your stop loss. If it fits your risk and money management rules, you can pop it above here. And you've got all this wonderful price protection acting organically for you. You don't have to do anything else. Really don't have to think about where you're going to put your stop loss. It's just self-evident. You want to put it above the congestion phase here. And then you've got all that protection. If the price pulls back against you, you've got all this price protection here. And then ultimately we get into the trend as it really takes hold there. So that's copper, but this could be any future that you care to name. But I stress again, we are in purely Globex here, and I hope you can see. And also the other takeaway, and the reason I wanted to do this was really show you, to demonstrate how volume price analysis plays out in precisely the same way, whether we're looking at a future on Globex or whether we're looking at a future with the cash markets running alongside. The volume is entirely demonstrable. It's very clear. It's absolutely read in the same way. It's just that when the volume comes in at the cash markets at 2:30 our time, US time obviously is 5 hours earlier, and just compresses everything, it doesn't make it less meaningful. And as I've stressed many times before also, as you can see from these charts, the price action here is really very measured. It's very easy. There is no great volatility. There are no huge swings here. It's just even paced, nice, steady price action. So if you're in a part of the world where you can't take advantage of what you consider to be the ideal opportunities where we've got cash and Globex running together, why not trade in Globex alone? There is absolutely nothing wrong with it. And I'm afraid I take a completely opposite view to anyone who says that you can't trade in Globex. I do it all the time. To me, it is much more and far less stressful and less emotion to deal with, I can assure you. That's copper futures. Just a quick look at a couple of others just to really reinforce those points. We've got crude oil futures here on the CL contract. Again, as you can see, pretty bearish. Just eyeballing across our 3 timeframes, 5, 10, and 15 up there. And once again, what it tells you instantly, what the indicator, the VRSI indicator tells you instantly just by eyeballing it, is that this trend has momentum, it has strength, and that strength is not diminishing. Look at the 10-minute in the center here. Look at the 15-minute over here. Are we seeing these pressure bars falling away and moving back to the fulcrum? The short answer is no, we're not. We've got obviously different swings, different levels of that pressure signaled on the 5-minute because the 5-minute is a different time frame. But what the 10 and the 15 are telling you, if you're trading off the 5, stay in the trend. There is no reason to get out yet. Absolutely no reason at all. Even when we see these little reversals, it's only a question of, yes, the pressure bar has changed to salmon pink. We've got a slight weakening, but those heights of those bars is significant. This is where we started, remember. This is the start of that move, quite low, but nevertheless dark colors, which is absolutely fine. Then we get into it as we get into London Open, and off we go. And we get the volume surges coming in, and we get our pressure bars rising, but they all are pretty much consistent in height. Of course, you're going to get differences, as you can see. But if you put a ruler across here, that's a really nice, steady trend. the pressure is identical. It's not falling away quickly. It's not gone ballistic. And it just mirrors the fact that we have this nice, steady trend coming down at 45 degrees, easy to trade, easy to get into, and that's all I can say. And when you look at it at the bottom, you look at the 10-minute time frame on our VPA analysis. If we're in this trend and we get one of these signals here, for example, we've got an upthrust candle halfway down there. The market's tried to rally. The big operators push the price up, back down into weakness. We've got lots of volume under there. What is that telling you? It's telling you one thing loud and clear. This trend is going to continue. This is not a reversal. There's no way this is a reversal. And you've also got it confirmed here with these two up candles. What are we seeing? Two efforts to rally here. What's happened to the volume? It's falling away. That's a secondary reversal against a primary trend. This is our primary trend. This is our secondary trend. But in our secondary trend, we've got falling volume in a rising market. So what is that telling you loud and clear? The trend is not going to end just yet, and you just stay with it. So you've got all these fantastic messages coming across, either from your VPA below or from your VRSI above. It's just a perfect way to trade. Here we go. We're on 5 minutes. Let's just pop that up full size, make it a little bit easier to see. Pull the price action down. There we are. Move it over a touch. So we've got a big surge of volume pressure coming in here. We can see it. We're getting a nice wide candle developing as well. So oil is continuing to fall. Absolutely no reason to get out just yet. And that's on the 5 minute. And you can see all the other lessons that I've covered in the introductory videos and everything else, where you see congestion phases. We see a reversal back to the fulcrum here, a little bit of an increase in pressure here, back into bullish there, but it attenuates relatively steadily, and we come back down again. And of course, you'll be looking at this not just with one indicator as we are here. You'll be looking at this with support and resistance indicators attached to the chart, volume price with your VPOT perhaps on the chart. You'll be having your trend monitor and all the other indicators. And of course, you will be looking at this in the context of fundamentals. Maybe there is something coming out about oil. Maybe there's a supply issue. Maybe there's some demand. We've got OPEC to deal with when you're dealing with oil. And of course, it's an entirely managed commodity. So you have all those issues as well. Plus, you've got the weekly oil inventories and all else that goes along with it. You've got the driving season and 26 other reasons that oil may go up or down in price. But again, all of that is covered within the chart, as you can see. And we are just trading what we see on the chart on an intraday basis. And it is very straightforward at the moment. There is absolutely no reason to close out this. We just stay with it, hold the trend. We're not going to be flicked out emotionally. We just stay in and hold our position. That's on 5. This is on 10. Similar sort of thing right the way across the piece. There we are. That's the angle of the trend lower. And this is the height of the pressure bars. Pretty consistent. There's no great diving away in terms of lessening of the size. Yes, we get transitional colors, but then that's what we expect to see. But it's really not changing anytime soon. And up onto 15. There we go. Precisely the same message is being delivered there in the same way. Fantastic stuff. Finally, let's just hop on to another very popular future, which is gold, which is on the GC contract. Let's just see what's happening with gold at the moment. Not a lot here. It looks as though it's let's open the chart full size. So kind of moving sideways, as you can see. We've had some bearish and we've had some little bits of bullish here, but it's pretty much in sideways for the time being. So that will be one to wait and be patient. Or if we look at, let's have a look at the one in the middle here. Let's have a look at the 10-minute, for example. Pull that down. We're in a pretty tight congestion phase here. We're moving between 1965 and 1970. So it's a $5 range here, pretty tight. And that, of course, is confirmed on the indicator down here. So we're oscillating around a tight range. We're in congestion. We'd have our floors and ceilings building, and all we would need to do here would just be patient, wait for that congestion to break away. And then, of course, what we'd be looking at in terms of the price action is, and the volume, we will be looking for the volume to confirm any breakaway from this congestion phase, which has actually been going on quite some time. So it's very tight. We just have to take note and just wait for the volume to confirm the breakaway for that particular commodity. So there we go. That's a look at the VRSI in terms of applying it to the futures charts. And it doesn't matter whether you're doing this in cash and Globex or you're just doing it in Globex, as we've done here. It works in precisely the same way as indeed does volume on our VPA charts below. So I hope you've enjoyed this particular video. Lots more to come. As I say, I'm going to do some longer term time frames from an investment trend and swing trading perspective. And we'll also take a look at some ETFs, but I can assure you it works in exactly the same way, whatever the instrument, whatever the ticker at the top of the chart. So see you soon, and bye for now.